Good morning. Welcome to OptionsTender. It's Wednesday, CPI day, January 15, 2025. We're going to go over, first of all, SPX, then go to SPY. We're going to go all the way through the monthly to the 65-minute. What a big day today. And this is huge. And then we'll go around the horn on the 65-minute instead of the daily this time, since we did the daily yesterday. What was huge was, and you know, I have individual videos that I do for the $4.99 members, and that's $4.99. You guys, I keep saying $4.99. I feel like some people are probably like, "Wow, $500. What is that monthly, year?" No, $4.99 a month, $4.99 a month. So these individual videos, we talked about positioning our portfolio, our options portfolio, almost like a uneven straddle strategy, to where we have our long dated puts, but we are ready for a big move to the upside with CPI with shorter dated calls, and those worked out excellent. So we're trying to neutralize our portfolio right now and adding in some more puts, but continuing to hold for calls. And that's where this discussion is going to go today, with the same thing that was leading from yesterday. Now, what are we looking for? Okay, so there's going to be a bull bear line, and that's also going to be considered a bull flag breakout if we break above, or if we reject, that's going to be a 1-2 setup for the bears. All right, so here we go. We're doing this intraday, 11:20 a.m. Eastern Standard Time. If you want to get these videos, consider becoming a YouTube member for 99 cents. And it comes with all of them come with the Discord, the intraday video. Patreon, I'm not capable of bringing those members in with intraday videos. So that's why I recommend YouTube. Here we go. SPX on the monthly time frame. 29 top, 2000 top, 2024 top so far. Now that's in confluence with this channel top, 2008, 2021, and we're looking for a reversal here. So the big question is not whether we're starting a bull market or anything. It's whether or not we eke out a new high, very similar to this. You have a monthly candle, you get a new high. This one even got another new high. Maybe that's 3 drives or something like that. So this is lower, higher. Do we get a new high? Here is the big question. Either way, we're looking for a reversal. Okay, we're biased short. You see where we are. This is a historical top. All right, enough dwelling on that. SPY, this is a different point of view. We don't have enough information to go back to 2029. There's 2008. There is 21, and here's 24, okay? Let's go to the weekly. On the weekly time frame, there's that same 21 top. We had a slight throw over, and the 24 top there, December 9th. And we're breaking down, and right now we're fighting with the 8 EMA. That's our momentum indicator for the downside, but we lean towards the bull on the weekly time frame because we're back above that very important weekly simple 20-week moving average. Okay, this moving average breaks down, especially by the end of the week. If we get a wick through there, that'll be very bearish. That's going to be super important on this time frame. Okay, right now we're pushing off of it, just like all of these moves, getting above it and then making new highs. So do we get a new high here? You got a new one? Very possible. That would be around 610 or so. Now, when we get done with either our upside or reversing this week, CPI is tricky. So today we could get an up move, but I'm going to show you that this move is not done yet. And just on the super low time frames, we have to work out one more wave to even see what we're doing here. So, but our first target to the downside, if and when we get there, 560. I'm not going to harp on that one. That will be obvious. If we start to get to there, we know that the trend line has broken. We're not going to talk too much more about the downside targets yet. We just really want to discuss what's happening in the now. And this is why it is so important. We have the 2021 to 22 correction, and then we have our extension or our retracement, 127.2, and then the 162. Super important level there. We broke above it. So if we break down from it, that's a fake break. We're looking for the beginning to middle of February for a cluster for something to happen. So we'll see where price is. If price is up here, then we're looking for a reversal to the downside. If price is down here, we'll look for reversal to the upside. As simple as that. On the daily time frame, daily trend is our friend. And here's this trend line we're really looking at. We held it, and with CPI, we broke back above it. Now, this potential bull flag that we talked about holding on to yesterday is still in play. Okay? This is still in play because we're back above 585. 585 was just such a super important area. All right, so we also have an island gap here as well. Okay, so I don't think we have one on the Qs, just on SPY. We have an island gap, so if that holds, that's a bullish sign there. What we're going to do, the game plan, is to kind of neutralize, for the most part, our portfolio here at 594. 594 is going to be an important area. And with this flag, I have this actually drawn a little bit different here. In the lower time frames, going from top to top here, that's going to bring us to about the bull bear area to where we might start breaking out. So if we start breaking out from that 494, 495 area, then we could start to lean more bullish and go a little bit heavier on some of these setups that we have to the upside. But right now we're looking at NVIDIA, Tesla, and we have some other ones that we talked about today. We are having a difficult time here at the 20 moving average, and then we have the 50. So let's go over to here first. Not much to talk about here except for a cluster from 124 all the way to 128. We'll see where price is when we get into the end of the month here. We're looking at next week and further. All right. And then let's go to 65, and then we'll go around the horn on the other indices. Okay, so there's our potential bull flag. And if this starts to break out, that's how we will label it. But we have to get above the 594 area. Okay, so we're above the options expected move. We have a island breakout, and that just means this is left alone here. We had a gap down and a gap up above it, so that is bullish if it doesn't close today, for example. Now we have FOMC on the 29th, so that kind of lines up with that cluster, the time relationship cluster. Let's go ahead and change boards here. Now, this is what, on a bearish note, this is what we'll be looking for. Okay, so this is, and we talked about 2018. It gave us a similar pattern. And this can be a 1, and then an ABC for a 2. And now we're looking to extend this, whether it's an AB or a 1, 2, doesn't matter. We're above the 62% retracement. And so we're looking for the 594.59, which happens to be where the 50-day moving average happens to be right where the downtrend is. It would be a lower high. So we're going to add on and kind of neutralize our positions where if we break down from 594, then I'm going to, obviously start to lean bearish. If we break out from it, I think that is the repair section, and then we're getting a little bit more bullish. As a matter of fact, it'll be a bull flag breakout. And we do have time and price going on to the 16th, which is tomorrow. So I'm thinking we look to get a top here tomorrow, that we're done for the most part with this move today. So we'll be looking for that to go into tomorrow. And just moving back here quickly, I want to talk about the structure. So we have a possible A, B, or 1, 2. And so we're getting our lift off from there. Now we have another structure here. Whether this is an A, B, or 1, 2, we still have a 5-wave move that we're looking for here. And we only have a 1, 2, wave 3 here. So we're looking for this to consolidate at or above the gap area here and the options expected move for probably the rest of the day. And then we're looking for a breakout. This could happen today too, but then we'll look for a breakout from this wave 4 into a wave 5. Now that will be the telling part. If this is impulsive, then after we get to this point, we need to start breaking out from here and continuing on, not only with this wave 5, but this structure here, the first one, needs to play out. So that'd be a 1, 2. And the wave 3 will get us here or further. And then we get another wave 4. And we should get an extended wave 5 even further to test the highs. All right, so that's what that should look like if this starts to break out. And I do think that would all be one move. I don't think we're going to start building another 1, 2. It's possible. And then an extension where you get another 3, 4, 5 much higher. Okay. I think testing the highs and eking out a new high, and maybe tech getting a lower high, for example, those sort of things. So I'm not going to get too much further into that. But that's what that should look like. If we break this downtrend line, I think we start another consolidation and we get the extended wave 5 to reach a new high. But we got to get past 594. Bull bear. QQQ, same thing. This is a potential bull flag. About 520, 521. About 521 would be this bull bear line. So I think right here looks a little bit different. This might be a 1, 2. To me, this looks like the A, B, and C. Okay, you don't see too much structure here. You just see basically a 1 high and a 1 low, and now we're making another move. So, but with just like with SPY, we're gonna probably consolidate here and move up for, in my opinion, one more move. But if we break over 521, then we'll have to start leaning more bullish. And that should look like this. So first of all, we haven't even hit the 62% retracement. I was expecting to add just a put or two, contract or two on this section here, just in case, you know, the Qs wanted to get a lot weaker. We talked about in today's video also for members, the bonds. Okay, the bonds have reversed. The 10-year rate is reversing. That is bad. I know a lot of people are going to say, oh my gosh, you know, that's good for the economy. Well, yeah, eventually in a couple years from now, that will reach, you know, companies and things like that. But it's signifying a recession at this point of this move. So right here, we still could possibly have the 1, 2, and this being a 5-wave move, 1 and a 2, and continuing lower. I think it's more likely for, even though we're getting a sell-off here, I think this is more of a consolidation. If not, we let it ride because we are already in swings to the downside. But I think it's more likely that this consolidates and comes up here to the 786, which is the 521, where we're talking about, which would be the downtrend line. Okay, I think that would fool people a lot more. But if we fell down from here, that I guess that would be, you know, something we wouldn't have been expecting anyway. So now looking at SMH. SMH is back into that triangle, reversing off of resistance here, but still, just like SPY, still has a structure there. So I would suspect that this has some sort of consolidation and goes a little bit higher, maybe even to the options expected move here at the 254. And so I think NVIDIA would be the leader on that move there. If the market's going to go higher, NVIDIA is going to have to be in the game. IWM. This one's getting a little bit of a sell-off here as well. Now, this could go high enough to backtest here, but right now it seems to just be making a lower high at this point. We'll see what happens. I don't know if this is going to be a running flat. We had a flag pattern here, and really we're just backtesting that flag. So we'll see if this is real, if this move. Otherwise, we have a little bit higher to go. We have the this one should start leading as a relief. Okay, the small cap should start being relatively stronger with lower bond rates, the treasury rate, excuse me. And so we should see some relative strength in IWM. Not that we're going to play it to the upside, but we should see tech starting to take the lead. So this one, DIA broke its downtrend, and we should see this hold up fairly well as also. VIX. VIX is important on the daily time frame, so we need to look at that. And then we'll go to 65. So the VIX came down to the 50 and the 200 moving average there. So this is a big spot. I still think it could go underneath. If the market wants to continue higher, it still could break down underneath and then rip through, forming a possible reversal candle. This is a big red candle, so we'll probably get a spike through and a reversal looking candle on this before heading higher. And going to the 65, we're almost to the uptrend line here, so we can actually draw it a little bit. Yeah, that's fine. So we're getting here, and you see how that has a 1, 2, 3, and this is probably a 4, and then just a little bit lower, maybe tags this 200 moving average here as well. I don't know how solid this trend line is, but we do have 3 touches on it, so maybe we get a spike through here and then higher from that point. So that's what we'll be looking for. I hope that helps. Don't forget to subscribe and like the video. We will update you tomorrow.